Okay. Good morning, good afternoon, good evening, wherever you are in any part of the world. Thank you for joining this program. Today is sorry, let me tell you the not to worry. Don't worry. So don't worry, since I figure it out, let me leave this thing here. I have the class going, I'm teaching a class. Okay. So no worries. Thank you. Appreciate that. Okay. Okay. Good morning, good afternoon, good evening. Wherever you are in any part of the world, I thank you for coming today for today's class on e-commerce entrepreneurship. So at the beginning of this class, we started with we said this class is about e-commerce entrepreneurship, the e-commerce entrepreneurship class. So what does it mean? We want to teach. We want to talk about how to. So entrepreneurship is about starting a business. What type of business? E-commerce. The kind of business that you do over the internet, buying and selling over the internet. That is what e-commerce means. But the entrepreneurship is the act of starting a business. Now, so how do you start a business without money? So the finance part, entrepreneur finance is very key because it's the act of acquiring capital. You have to acquire capital and make financial decisions for a new venture or a startup. That is what entrepreneurial finance is all about. So how do you acquire the capital to start the business? Not just acquire the capital, but how do you make financial decisions? So that's actually what the training for today is going to be all about. And I do hope that you find value in it, the information I'm going to share with you. So let's go on to the agenda, so that the outline of the training for today. So in today's training, I'm going to talk about the accounting and finance because, like I told you, everything has to be purpose driven. We have to know reason why we are doing anything we're doing. That's what I'm trying to give you this explanation. Okay, you want to start a business, you want to do e-commerce, you want to make money, because I asked you in your body form, second income or this. So now, the whole essence is to give you the equipped with information and knowledge that will help you make financial decisions. That's why we are introducing this. So I'm trying to so that you can find a connection between what we have been doing all this while and what we are doing now. So the section we're going to cover is going to be overview of accounting and finance. Then we're going to cover the performance. I need to change that to performance metrics. The performance metrics, then the revenue streams, expenses, 10 ways for your e-commerce business to finance your e-commerce business. We talk about taxes, then we end it to question and answer. Then we have how to grow your e-commerce business as our next class. So our next class will be on Monday. So it is at that next class that I'm going to present you the offer on how we're going to work together so that you can actually hit the goal, be successful. Be successful in this venture. Thank you. So the first thing we're going to cover is type of business organizations. Then what type of, so that you know, because the type of business organization you choose will determine is a financial decision. To be honest with you, it's a financial decision because it's going to affect the finance of your business. So you need to understand. Most likely, you're going to choose the corporation to set up a corporation at one time or the other in your business. And then you need to understand the difference between the different types of corporations. That's why I introduced that. Then you also need to know the difference between finance and accounting. The finance and accounting. So we need to know the difference. That's why I say finance versus accounting. So we need to know the difference. Then after that, we know the types of accounting we have. Then we need to understand the concept of asset, liability, and equity. Then also expenses and expenditure. Then we go lastly to financial statements. Just a brief thing. This is supposed to be like a semester course, but we're just trying to do a crash course, or it's a crash course on entrepreneurial finance. Then we go into performance metrics. So what is the definition of success for your e-commerce business? How do you define what are the numbers? What are the metrics that will tell you that your e-commerce business is successful or not? Because if you remember, I say how to run a successful e-commerce business. So what is the definition of a successful e-commerce business? We're going to cover that in the course of this class. Then also we go ahead to what are the different revenue streams that you can have as an e-commerce company business. Apart from just selling a product, what are the other ways you can really make money? So that's going to be covered and discussed. Then we go into expenses. What are the main costs to set up and run an e-commerce business? So you want to run an e-commerce business. What are the expenses? What are the startup costs? What are the recurring costs? The different kinds of costs that may be required. Then we're going to discuss that too. Then we have come to online and find an article which about 10 ways to finance your e-commerce business. So we look into that 10 ways, and then lastly, we're going to talk about taxes. Because taxes, you can save money, you can lose money. If you don't have knowledge of taxes, you may be paying too much. And as a matter of fact, the laws allow you to avoid paying taxes, but not to evade taxes. So we're going to talk about difference between tax evasion and tax avoidance. Tax evasion is illegal. Tax avoidance is legal. So if you can avoid paying taxes and you can put the money back into your business, that's a smart move. So that's actually some of the things we're going to discuss today. And probably I'm going to give you some examples and case study if time permits us, so that we can really understand this idea and how we can use this information in our own business. So let's go to the next slide. So in this slide, regardless of there are fundamentally 3 types of business organizations, respective of where you are, respective of your country. So there are 3 types of businesses. One, you could either be a sole proprietorship. A sole proprietor is just only you, just you that is running your show, nobody else. At times when you do it with your spouse, it can still be regarded as a sole proprietorship anyway, because it's you and your wife that is running them. And culturally and legally, husband and wife are supposed to be the same thing. So they can be treated as sole proprietorship. You and your wife, husband, you are the one running, you and your spouse are the one running it, or you alone. It's still a form of sole proprietorship. So it's only you. And what is it has its own benefit. What are the benefits and what are the disadvantages? The thing about sole proprietorship is that it's all about you. He has no legal entity. He has no legal entity. He has no legal entity of his own. Your business is you. So in case if anything go wrong, God forbid, if anything go wrong, you're going to be held responsible for that. So you cannot say it is a company that do that. You cannot kill yourself. But if it will be a business company, you can just close the business. That means you kill the business, but you cannot kill yourself. So it has its own advantage and disadvantage. So there are so many of them. So you can Google them. What are the advantages of sole proprietorship and what is the advantages? It's just a general concept. But many of you are already familiar with it. That is the way we start up. And then how do you form it? You go to your I think in Nigeria they call it enterprises. Or go to run an enterprises and something venture, all this kind of thing. It doesn't have the LLC at the back of the name. It doesn't have the limited LTD at the back. So those are the type of business organization that normally happen. One person, one man show. But the other one we have is called a partnership. So within the partnership, there are two types. Partnership, as the name implies, that is when 2 or more people come together to form a business, with the motive of solving a problem or meeting a need of the people. So that is a partnership. We have what we call the general partnership. We have what we call limited liability partnership. General partnership are people that all of them, they are actually involved in the business. Maybe me and Madam Toyin, we come together in business. So we are partners. So as we are running the business, the two of us are engaged. I mean, the two of us are involved in running the business. So we are general partners. If anything go wrong, both of us going to be held responsible. It's going to be held responsible. Nobody can, you cannot claim that, oh, I don't know. So we are general partners. We are active in the business. So that is it. So if anything go wrong, they held the two of us. But if you can be partner with somebody by not being active in the business, but rather maybe you invest money into the thing or property or so. So in case of any loss or any problem, whatever your risk is limited to you have a limited liability, limited to the amount of money or resources that you put to that business. Nobody can come and hold you because you are not involved in the day-to-day operation of the business. So an example is somebody setting up a restaurant. You put money there to your friend. You are a partner in the business, but you are not the one doing the cooking or running. The other partner is the one running it. So if anything go wrong, they are not going to hold you. They just put money there because you are not active in the business, responsible. That is limited liability partnership. And then as against general partnership. So the third part is the corporation. So corporation is actually what is encouraged for most parties at a point in your business, because it's the safest one. So that is actually, so if you want to raise money, you want people to invest in your business, you want to sell shares, a lot of things you want to do, so you can operate it. The corporation is set up for you to do that. So corporation is a legal entity, distinct from a person that often has similar right to a person. So a corporation can own a property, incur debt, and sue and be sued. Corporation provide for limited liability and easy transfer of ownership and continuity of existence. So what am I trying to say is that a corporation is technically is like a human being, because every right that a human being has, a corporation will have it. So it has it. You can. That's why it's just a vehicle, a way that you can really, I mean, just the system, the way the system works. So okay, you are the one that owns a property. You might say, oh, you own a property, you own a corporation. Your corporation owns some property. So you can say, oh, this corporation, it allows you a lot of flexibility. It allows you a lot of flexibility. That's actually the whole essence. So the ownership, you can invite people to come and be part share owners, and somebody can give you money. Instead of being a partner, you are owner. Come and be a co-owner. You allocate some percentage of the company to the person. So that's actually the whole essence. So we have business, proprietorship, partnership, and corporation. Okay, so we have, what are the types of corporations that will exist? So we have different types of corporations. So you have to know all of them has their benefits and advantages. I mean, disadvantages and benefits. So it might be, depending on the session you are, you might know, okay, which one are you going to operate or not. So that is the essence of all these types of corporation. We have public corporations. We call it PLC. PLC. Their name always ends with PLC. That is Nigeria. But in the United States, they don't know, it doesn't really matter. They don't use the word PLC at the end of the for a public traded company. But what it means is that it is traded, the company, it is traded in the stock exchange, meaning that people can buy stock, the stock from there via the stock exchange, the capital market. You can list your company there. Then it's a market where buyer and seller meet. So you can be trading on the stock of your company. So that is a public traded company. So it's become a public corporation. So you don't just, there are requirements that need to be met before you can become a corporation to raise money through the public. Then we have the private corporations. The private is just the opposite of the private. They are not public, they are private. That means they don't really. So when you say something is public, their information is publicly available and they are accountable to the public. So, but for private, it's private, it's not public. At times, if you want to raise money, they don't raise money from the public because they are not public company. So they raise money privately, maybe from the bank or whatever it means, which is not that. Then we have not-for-profit corporation, like NGO, they call it NGO in Nigeria, or different name, or not for profit. Yeah, or we say not for profit, non-profit organizations. So it's another form of corporation because it exists, it can exist. It has a legal, it is a separate legal entity on its own, separate from the founder, people that have started them. So they are completely different. So, so that's really what it means to be for profit. Then we have the governmental corporation too. Some companies that are set up by the government. So they are not public. The government is already public, and they are not neither public, private, but they are government agency. They are government agency. So they run like a corporation as well. They run like a business. Then we have the substrata X. Substrata X is another form of private corporation, but it has some limitations. In the US, we call it the S corporation, and it's only a domestic corporation. It's only people in the United States alone that can form that kind of corporation. Somebody in another part of the world, outside the United States, cannot form an S corporation. And so they design them for different purposes, maybe for the benefit of the economy and for the good of the public. So they design the laws just to favor them. The tax bracket might be different, the requirements, the tax law, and different things that are involved. That when you look at the options, by just mere careful knowing what type of corporation you will choose can save a lot of money. If you just know the type of corporation that is appropriate for your own business, for your ventures, it can determine how much money you save. So that's why all these are part of finance. Because if you may be paying too much in taxes just because of the type of corporation that you are filing. You might even be paying double taxation. You pay tax at the corporate level, then you pay tax at individual level. At other intermediate level, you pay taxes just because you don't choose your corporation tax clearly. So that's why it's always important when you want to register a new company, you have to contact a lawyer or a CPA, an accountant, or a tax pro. So those are the people that can help you know the one that when they listen to you, they know the type of corporation that will be most appropriate for your business, for your new venture. Then we also have what we call the limited liability corporation, which is LLC. That is really very common here. So it has its own benefit too in terms of taxes, laws, and all that. For example, it's so flexible. You can file this LLC. It allows you to be filed their taxes in three ways. You can file taxes, claim your tax days on the way you want. Because as a sole proprietorship, as a self-proprietorship schedule, we call it Schedule C. You can also file your taxes as a private corporation, which is called the C corp, the C corporation. We call it you file 1120, RS form 1120. Then you can also file it as a subchapter X, which is S corp. You file RS tax 1120. All these different type of form type that you tax for you file, it determines how much you pay in taxes and how you are classified. So just knowing the type of corporation, the LLC type, the type of election you have to pick can determine how much money you're going to save. So when money is involved, we are talking about finance. So that is the essence of all that. So we continue. Now, I'm here now. Okay, I finished Josephine types of corporation. Then we want to talk about finance and accounting. What is accounting? Accounting is a system is a systematic way of recording, reporting, and analysis of financial transaction of a business. This is a business. You need to keep financial record for your own self, for the benefit of your own business, of your growth, or your strategy. To know how to assess yourself, you have to keep record. We call it bookkeeping and accounting. So that is when you keep financial record, your transaction, you buy this, you buy that. Those transactions are important. You can use them as evidence. It can even be used as an evidence in court. It can help you, save you from a lot of trouble when you keep the right record. So that is accounting for you. And accounting is actually said that is to be the language of business. If you are running a business, you must have an account. You must do your accounting. There used to be a joke that where 2 or 3 people are gathered and money is involved, there must always be an accountant. So when you run a business, you have customer, and then you must have an account. You must do your account. You must really do your account. So that is the accounting for you. Accounting is to keep the record, is to keep your financial record, everything to be clean. That is what accounting does. So if you meet somebody, they want to see your record. As a matter of fact, financial record is really important. Most people, even your investor, want to see your record. Where's your record? Your spouse want to see your record. You are doing okay. Your children want to see your record. They want to know that you are serious, that mom or dad is serious with this business. Mom, how are you making money? So all this, if you don't keep the record, what will you show the people? Government can come on you, RS, the tax authority. They want to see what you are doing. You have to report your financial record. If you want to bring an employee to your company, they want to be sure that the company is healthy. They have tomorrow. They know that is financially healthy and they are making progress. You need to show them the financial record. So when to prove that, it is your financial record that will prove it for you. So you have no excuse not to keep your financial record. That is the reason why company as an e-commerce business, at one time or the other in your business, you will need to hire an accountant, a bookkeeper, an accountant to help you make sure that your financial records are up to date and at par. That's why I'm explaining all these things. Then we come to finance. The finance is different from accounting. The finance is the art and science of managing money. Managing money. You see, I want you to know that most times people are poor, not because they don't. Some people get paid, but they don't know how to manage money. That is finance problem. Managing problem is a skill, it's an art and science. That's why it's called the art and science of managing money is finance. So to succeed in business, you need to know your finance very well. Know that you are selling, so you don't just give away money or you don't just buy things without really knowing how to manage money so that you don't run into trouble. So now, how does their work? Finance deal with cash flow. You see, there are 2 things that can kill a business. You have a good business idea. Most of the times, one of the things that can easily kill business, that make business to fail, is when you have a cash flow problem. Cash flow problem. To be honest with you, many people are dealing with that. They have good business, but they need to pay this bill, but there's no money. And the money has to go. Most of the times that you have to go and overdraw your account. And when you overdraw your account, that is counting against you negatively. Because what you're supposed not to buy, you need to know when to buy some things and when not to buy something. You need to know. So there's a way. It's called cash flow. Cash flow is really that is what finance does. That is, we deal with cash flow. So now, then we also, accounting deal with accrual. The accrual is the accounting base that brings items to account as their earn or income and not as cash or paid, and include them in a financial statement in the in the in the in the what's it called? Okay, in the related accounting period. So what am I trying to say is that accounting deal with the accrual. When money is coming, you know that money is coming. There's a promise that money is going to come. So not until the money come, you already record it. So we call it account. We call it account receivable. It's not they have not received it, but the account they are going to receive, the money they are going to receive is receivable. So it's a promise. So accountant take care of that. There's another account called account payable. The money they are going to pay out. For example, maybe it's agreed that at the end of this class, you are going to pay me money, or I'm going to pay you money. So as an accountant will appear plan for it that we have to make some payment to at the end of when this thing is complete. God there's a promise, an agreement already in place that you're going to make this payment. So that's what the accounting is for. So that's I won't want to beat overbeat that. So now we have okay, types of accounting. So we have the financial accounting, that is recording of financial, because accounting too, they are breaking into so many parts. So um, we have the financial accounting, that is recording the financial transaction and position of a corporation, particularly for the benefit of external party, that is the shareholders. So the financial accountant make sure that the financial transactions and position of the corporations are principally for so is on point. Then we have the managerial accounting. This is the area of accounting that is concerned with providing internal financial report to assist management in making decisions, involve developing and interpreting accounting information, specifically to assist management in running the business. What am I trying to say is that there is an accounting that you prepare the record just for the external, like the shareholder, like the RS, or different kind of people. It's different from the accounting that you used to run your, and now you create another version again for running your organization, because the information you're going to provide in the financial accounting will not going to be as detailed as the one you put in your managerial accounting, so that you know where to manage, make decisions and all that. So there's a specialized form of branch of accounting that is required, that is involved in managerial so managerial need like that, which is called managerial accounting. Then we have the cost accounting. That is the area of accounting that deal with how to allocate costs, e.g. how to allocate an electric bill. So cost accounting is that you want to buy this, you want to do all this. They are specialized in how to allocate costs. That is actually the right word. So they are the one that will know, does it make sense for us to run ad now? How much are we going to spend in ad? Is the cost accountant that will do the costing and all that, use their tools to determine all those things. Then we also have the tax accountant. These are the people that you're going to be dealing with in the course of your business. You might not fully understand what I'm talking about now or find it relevant. But after a while, when you start running your business, you will see the need I'm saying. Because like I told you, the goal is that every of you that decide to go on a journey with me of our company, in 2 years, they're going to make at least a sales of $1 million revenue. You have become $1 million revenue. That is the promise I made for you. So that's the promise I made for you. Then we have the tax accountant, tax accounting, which happen to be my other business. It's the area of accounting that deal with tax returns. It also includes tax planning. Accounting links decision maker with economic activities and the result of their decisions. So tax accounting is the one that actually has to do with the preparation of taxes and all that. So it's really broad. And also tax planning, like I was saying at the beginning of this class. So it is the tax accountant that will know how to do all those things, so that you won't have to pay so much in taxes, or even avoid paying taxes at all. So it's the tax accountant that know the system. And how does the tax accountant do? They know the law, they know the tax law, because taxes is about law, it's about the law. That's why it changes every time. It's about laws. they make this law. So they design the law just to for the good of the public, of the people. That is why those laws are designed. But because there are too many things to learn, if it's not your line, you might not really understand the wisdom behind most of those laws. But the tax accountant will be able to interpret those laws and then advise their client, which may happen to be you as the e-commerce entrepreneur, the best route to take, the best decision to make. So that's actually why I'm poor this thing. And if on your own you want to learn, there are books that you can pick. You can go online, you can watch video, you can go on Google, you can read blog posts. So this will serve as a foundation for you for further learning when it comes to types of accounting, tax accounting, cost accounting, managerial accounting, and financial accounting. So we have a term called financial position. Okay, they say, okay, what is the financial position of your e-commerce business now? What are they trying to say? They are trying to say, describe your financial resources and operation at one point in time. Your financial resources, how much money you have now? Obligations, how much people are you owing that you need to take care? What is your financial position? Oh, we are doing well. You take away the resource, the obligation from the resources, and we are doing well. But if the obligations are too more than your resources, you know that we are shaking. Something is shaking. We need help. So these are the terminology you have to really understand all those stuff. So there's another one too that is here. Terminology is actually used in entrepreneurial finance. I felt that I need to share with you because let me make it clear. The topics I'm sharing is one. Anyway, let's leave that. Okay. Types and treasurer and controller. Treasurer, we have controller. Treasurer is responsible for financing, cash management, and relationship with banks and other financial institutions. That's what treasurer does. We have controller. Controller is responsible for budgeting, preparation of financial statement, accounting, and taxes. That is what controller does. Then we have, these are the people that is in the finance department of any organizations. So we also have the CFO, the Chief Financial Officer. So the Chief Financial Officer oversees the treasurer and controller and asset overall strategy, financial strategy. You see, when you are just starting up, you might not even know. You will be the one doing all this thing yourself as the owner of the business. You are the treasurer, you are the controller, you are even the CFO. Yes, at a point in time. But it might be required at a point that you may want to hire a CFO to help you with financial strategy. That is what we call financial CFO. He will look at what you are doing, your relation with bank, how you are doing your financial statement and accounting and all that. Then he will advise you. He will help you, formulate a financial strategy that will help your business to grow, to move forward. So that is essence. That's why I'm introducing that to you. So you know which one at any point in time is the right fit for your business. Now, we're going to go into another concept again, which is called the asset, liability, and equity. What are assets? Assets are things of value a business owns. What you own are the assets. Asset can be tangible, it can have physical substance, you can feel it, or intangible, e.g., copyright, trademark, even including what's it called? All this programming code, which is called the what's it called? The programming code. We call the what's it called? I forgot it, but when I remember, I'll let you know. So these are on that form, like all the code, like the what's that? The Facebook. What is that? I forgot now. So those are the types of These are the type of intangible assets. Assets that are supposed to be used or converted to cash within a year are called current or short-time assets. So assets that are expected to be used for more than a year are called non-current or long-time assets. Sometimes they are called fixed assets. So that's actually the whole idea. You know, we have a tangible asset, the asset that you can feel, you can touch. Intangible assets, they are non-physical, intangible, like copyright, trademark, all the code that you write. What's it called? Like is it algorithm? The algorithm of a code, the algorithm. Those are part of the algorithm. Those are the intangible assets that you can claim. So and then you can use them for your tax purposes. Then we have liability. Generally, liability is financial acquisitions or debt. If you are owing somebody, is a debt. You are owing, your business is a debt. This is what business owe. Liability can be either short time, due within a year, or long time, such as mortgage. So when you your company has a mortgage that you are paying, it's because the bank give you money to buy the property. Then you are paying mortgage loan, mortgage interest on that house. So that is a form of liability because you own it. It's a debt that you owe. So that is the thing. Then we have the equity. Equity is the net worth of the business. It is the value of everything the business owe, asset, less what it owe. So if you owe $1 million, no, if you are valued at $1 million and you are owing $500,000, so your equity, which is your net worth of the business, is $500,000. So it's as simple as that. So the time we have here, we have the asset, liability, and equity. So don't say, oh, I don't know about accounting. Even if you know about business, you know about money. So you need to know about all these basic terms so that even when you are signing agreement, you don't look like you don't go to make wrong financial decision. That is actually what it means. So, from beginning, we say the price of acquiring capital and making financial decision is what make for the new venture is what is required to as a entrepreneur finance. Okay, having done all this, we want to go into what I call a financial statement. Because if you need to borrow money from the bank, most of the time what they ask you is they will ask for your financial statement. Go and bring your financial statement. So I cannot imagine you going through my course and you do not understand what is a balance sheet, what is income statement, what is a cash flow statement, what is a statement of retained earnings, all those terminology. Even if you are not an accountant, you are supposed to know them. They say accounting is the language of the business. Though these are some of the vocabulary of that language of accounting. When you are talking with someone, you as a business person, then you need to speak the right language. So when you cannot speak the right language, then you're going to be shortchanged yourself. People are going to cheat you. But when you understand the language, you're going to be fine. You're going to do well. So that's the way it works. So what is a balance sheet? Balance sheet is a statement of financial condition. It shows where a company stands in financial times at a specific date. Maybe say go and bring your financial sheet, go and make your balance sheet till today. So you have to know, okay, what are how much money they are coming? How much money that goes out? That is liability. How much money that is left? That is retained earning. So you have to do all those stuff, all the money that come in, and that is the asset in form of, because assets is also cash. All the cars that you have, all the houses, everything that you have, the business has, and you put because you have to put the value, the current value, maybe the market rate. There are different ways of determining value of an asset, because the asset that you bought for $20,000, in 2020. It doesn't work the same again. It's either has increased, it has appreciate or depreciate in value, either of the two. So if it appreciate, then that means it will add, the value will be different. If it depreciates, that means the value too is different. But sorry about that. I'm on dry. If it depreciates, that means it has lost its value. So you have to put all this together in a document that we call balance sheet. It's a statement that we call balance sheet. Then we also have what we call income statement. It can also become profit and loss statement. Shows a company profit related financial activity for a period of time. So it's similar to, all of them are similar, but it's the same thing. Income statement, also known as profit and loss. You put the summary, or you have to put the summary of your income, and then the summary of your expenses. You put them together on a spreadsheet. Most of the time we use a spreadsheet, Excel, to do all that. So if there's any of you who doesn't understand Excel, you can reach out to me. Maybe I can show you how to use Excel to do all this. But I thought of that. I said, I won't have to be spent doing how to do Excel on this kind of program. It's too ordinary. But if you have any problem or need, reach out to me. I will teach you Excel. So use Excel to do all those things. So we have what we call the statement, and that document again is statement of cash flow. You have to, if you don't cash flow, you have to do your budgeting. Because if you don't have a statement of cash flow, you will be running out of, you'll be overdrawing your account. To be honest with you, I was consulting for one company, helping them with their taxes. They were selling like they call them Amigo, what's it called? Amigo snack.
Yep.
They say snack. They manufacture snack. This company, they are making over $5 million a month. But do you still believe because of pure planning, their bank account still overdrawn at times? I say, with all the money that you are making, you are still overdrawn your account because they are not planning their cash flow. So they just they don't know when this bill is due, they don't know when that is will be paid out. So that planning and that statement is what the cash flows. Then when you take it, when you have as a business, you have a bank account. Then you have the money goes in, money goes out. But there are some times that money is going to be retained in that account that those money doesn't go out because you receive more money than you spend. So you have to have some retain. Those money can go out in form of taxes. But then you can come up with a good strategy so that you retain that money. You retain more of the money that you make. It's called retain earning. So that you plug back the money into the business. But because it's all of them are financial transactions, an accountant must have to come and account for them. So you can say that actually you have to calculate them very well, generate report and all that. So that's actually what the distributor retain earning does. So knowing all this now, we are coming here to a very important topic. How do you know that your business is going to be profitable? So there are many different metrics that can be used to measure business success. I meant to say, how do you know that your business is being successful? I told you just a few minutes ago of a business that is making $5 million a year. Yet they cannot pay themselves. Yet they cannot pay all their employees on time. Yet their account is being overdrawn. So what is actually happening? That is what this topic is all about. So we call it income business sources. What determines the sources of the business? So the number one metric is the revenue. Revenue is the amount of money a company generates over a specific period of time. It's called revenue. It's often calculated by multiplying the number of items sold times the price per item. Let's say you have an item that is sold for $250. That is the price of your product. And you sold 100 of them. every day. That is $250,000. No, $25,000. Let's say you only work for like 20 days in a month that you open your business. How? So 20 times 100, that is 2,000. So what does it mean? That 2,000, 20,000 times 250. That's about 50. That's about 50 million. So that's how you calculate your revenue. Then the profit. The profit is the difference what a company earns and what is spent over a period of time. Profit is calculated by subtracting all expenses from revenue and then divided by revenue. So that is profit. So the money that you make, take away the money that you spend away from the money that you make. Then you get your profit. Very simple. Conversion rates. These are things you track. Conversion rate measures how many visitors to your website turn into customers or leads to your company. This can be measured as a percentage or a number. Volume refers to the amount of products sold by a company over a specific period of time. So that is actually what determines your success. So this amount of revenue that you make, your profit, then the conversion rate, and your customer satisfaction. Those are what an e-commerce look at to see their profit. At times, you may be growing your business. You may not want to declare profit. But if the website business, because you are selling through your website, then the conversion rate really matters so much. Because it's not every time that a business you might even be having revenue, not making profit. That doesn't mean you are not making progress. So but you can measure it by your conversion rates. And also, you have customer satisfaction. If customers are satisfied with what you are selling, then that is actually key. It's an important indicator that you are making success. Now, we're going to look into different revenue streams that is available for an e-commerce store. What do I mean? Taking a successful site like Amazon, for example. Amazon, take it for example that your business is going to be like Amazon. So how does Amazon make money? So that's what we want to say here. So we are benchmarking to the top of the top. See, so gradually you might not be able to make money like this, but that is where you are aiming at. That one day I'll be like Amazon, then I'll be making money like the way he's making. So we have the commission revenue model. Commission in the sense that Amazon has gone from being a store to become a marketplace. What is a marketplace? You allow other businesses to come and open a store by leveraging its traffic, and then in turn you will make commission from everybody that come and set their store in its marketplace. So in that case, it earns revenue model. So we have subscription revenue model. Subscription is when you are, instead of selling something every time, you make somebody to sign up for subscription. Like Netflix now. Netflix is a form of subscription. Every month when you are paying $10, $20 a month, that money you are paying is called the that money you are paying is called the subscription. That is actually the whole essence. So like Walmart, it has a subscription model. It makes money from the membership. You want to become a member so that you can get some deal. You call it Amazon Prime. Amazon Prime, you just subscribe, then you pay money. Whether you buy or you don't buy, you keep making money from subscription. That is actually that. So if your business allow you, you can actually run a subscription. Then we have what we call the advertisement-based revenue model. Advertisement-based revenue model. Google, Facebook, Amazon. You go to a site, you see some people actually run ad, just like we run ad on Facebook, you run ad on Google. Facebook actually have an ad platform where all those businesses that are listing their store on Amazon can actually come to Amazon to advertise their product. So, and Amazon will do the job for them. So that's actually Amazon. That is actually the advertisement-based revenue model. Then we have the featured listing model. Featured listing. What does it mean? Is that you can feature your product on top of the search result if you pay for the money. That is why you always say AD, advertisement or sponsor, below the term, so that you don't get confused. And as a matter of fact, they are required to do that by law, so that they don't deceive the innocent public. That's why the law requires that they have to tell the public that it is actually ad. So if you are looking for ad, you know where to go. If you are looking for a product without ad, you know where to go. So that's actually the whole essence for here. Then we have what we call the affiliate partnership revenue model. The affiliate partnership is when you go to Amazon, you see on the bottom of the footer, there is a link say, okay, partner with us, affiliate program. What does it mean? That any product on Amazon, if you have a general affiliate, if you are qualified for the general affiliate of Amazon, every product that they sell on Amazon, they will give you commission on it. What does it mean? That means they're going to give you they're going to give you commission. When you place the affiliate link on your website or on your blog, then somebody click on that link to take to them to Amazon to make a purchase. Amazon will give you whatever amount that he promised I was going to give from beginning for sending customer its way. They're going to do. So that's actually what affiliate market is all about. You are helping other people to find customer, and you too can do the same thing. If somebody is helping to find customer, or you can also sell through that way anyway, so that you can sell. The sales that you make through that way is called the affiliate revenue model. Then we have the sponsored email. Sponsored email is similar to the affiliate listing. You send, the sponsored email. Okay, you may have as an affiliate. Okay, that's good. As an e-commerce store, one of the two ways that you market is through social media. And when you are marketing on social media, the number one thing you'll be doing is to be collecting people's email address. You'll be collecting their email address. That is actually the thing that's going to pay you out. So when you collect people's email address, all those emails, they're already there. Then if you want to make money from that email, as you are using it to send out information about your own product, you can go and collect money. You need some money quickly, you can collect money from other businesses that target the same audience that you target, and then just do a blast to them on their behalf of that business. You'll be surprised that that business will make a lot of sales, and then you too, that is the owner of the business, you also make sales, because it's a win-win situation. You win on its end, then it will win on its own end. That is the essence. We have logistic revenue. Taking Amazon for example, Amazon will also help you to deliver your goods, different from their e-commerce they are doing. That it's actually still part of e-commerce, but now they help you to pick up your order, they package it, they deliver it. That delivery, which ordinarily you will be doing, is what they are doing for you. So that's actually another form of money that Amazon is making money from revenue, logistic revenue. So we have a physical product sales revenue model. Instead of relying on Physical sale, product revenue, okay, yeah. That is physical sale. You can actually sell a product. Maybe you list a product on your website, which is the beginning where you're going to start from now. You are going to focus on physical sales. That is like a selling. You are selling furniture or medical equipment. Medical equipment, they are physical things. The people can see them. So when you sell, you make money. That is how you make money. If you don't sell, you don't make money. It's as simple as that. So when you sell, you make money. When you don't sell, you don't make money. So then you can also sell information product. Not necessarily supposed to be physical products, information product that you sell. What is information product? You are selling information. You are selling information. For example, like I told you yesterday, that when you do this, for example, yesterday, when you say do this, you want me to give you a step by step, maybe a step by step or a list of vendor or drop shipper. That is an information now that costs money. So you have to pay for it. So that's actually what we call the information product. So you can actually set up a website, e-commerce store, just selling information. Look, research what people need and why those information may be necessary. Instead of engaging and buying and spending money on the physical product, why not just get the information one? For example, I know that you need a credit card. Most of the times that you need a debit card, credit card to make purchase online. But you are not swapping the card online. It's only the information on it that you need. Then you can just buy the information without buying the card. That's an example. And you can send it to somebody without anything. And that's how you make, that's another way to make money. So, sorry, I'm sorry. I'm still feeling strong somehow. How much does it cost to set up a Shopify store? This is the $1,000,000 question all of you have been asking me. How much does it cost to set up a Shopify store? Shopify plan, to set up a Shopify store, you need to have what we call the Shopify subscription plan. That is why I asked to register with me. It costs about $29 a month. That is how much you need to subscribe to the platform. It's like the hosting. All the software you'll be using, the platform is $29 a month. With that $29 a month, you can list unlimited products. Even if you have a product of 1 million, you pay $29. Somebody have a product of just one product, you still pay $29. That's actually the idea here. So these are the money you pay. You have to pay. You have a shop in addition to pay $29 to Shopify every month. Shopify also charges you transaction fee because the system you are using to collect your payment is provided for you by Shopify. So for every transaction, Shopify will take 2% to 3% from everything that you are selling. Meaning that if you sell a product for $100, you are going to pay up to $2 to $3 to Shopify. They will take $2 to $3 to Shopify. What is going to be given to you will be your $97. That's actually what that you are earning. So you should need to know to that. That is that. Then another cost that you need to keep in mind is the domain name. Domain registration. You need to register your domain name, www.anythingyouLike.com. So the cost is around $20 per year. That one is paid in per year. So the cost is around $20 per year. So that's the way it works. Then when you have that, now the other cost you need to develop business plan and conduct market research before you start developing your e-commerce store. So let's say you are hiring a marketing agency to conduct market research for your new Shopify store and do your business and do your business plan. It all depends on the type of project, the kind of size and the specifics of that project. you'll be looking at paying like between $500 to $5,000 a month. It all depends on how much you are, the type of business you are. So that will determine that. But that is actually the industry range. The cheapest you can find is about $500, and then up to about $5,000 for you to have a business plan and a market research setup. Then if you hire a market agency to help you set up, then you need professional e-commerce store for your business. Professional is that everything is on point. The legal document, the preparations, everything is well set up. The automation, the content, everything is set up. So it takes a lot of time. So that's why it normally costs a lot of money. So the cost range from $1,000 to $10,000 or more, depending on the site. Imagine if you are to build a website like Amazon, how much is it going to cost you? That one is a fortune. It's going to cost you a fortune to build a site like Amazon. So you need to also need a cost to set up market automations that will depend on that depends on the type of campaign you run. You also need the cost of marketing and advertising to drive traffic to the site. Because when you set up a e-commerce store, you need to drive traffic to that store. People need to know that you exist, and they need to come to the store to buy, not only your friends and family. So you have to spend money, either through content marketing, SEO, paid advertisement, anyhow. You have to spend money to bring customers to that part. But because I don't have an idea or type of business or e-commerce model that you want to run, then I may not be able to give you a specific number for that. But I hope by Monday I will come up with a specific number so that you can have a mental picture of how much it is to actually develop a website. So you also need to think about the cost of acquiring products. If you are to be selling physical products and you need to acquire them, you need to know the cost of acquiring products. But meanwhile, you can be selling physical products without actually acquiring them. That is, without keeping inventory. So that's why we come up with the cost of dropshipping. Dropshipping allows you to start selling products without keeping inventory. That's what the cost. That's that. Then the cost of managing and operating the site, include the cost paid to virtual assistant. And that cost that I will encourage you, because of this cost, to have higher virtual assistant. So those are the assistants that will be helping you, with your marketing, with managing your stuff. It could be in the area of sorry, let me turn off my camera. I'm feeling one kind. Sorry. Okay, sorry, I'm feeling one kind. So the cost of managing and operating the site, including the cost of that you pay to virtual assistant. Then the cost of acquiring products. These are part of the cost for running your e-commerce stores. Then we also look at the cost of warehouse of where you have to store your products. So renting where that's what you do, Sha. So it all depends on the way you set up your business plan. If you are doing drop shipping, you don't need warehouse, you don't need all those stuff. So you get to know what you're doing. So that's why I'm not able to come up with an actual cost for that. But what I intend to do is that I'll do a course for starting up with if you are starting a drop shipping, what is the cost? If you are doing a private label, what is the cost? If you are doing manufacturing, what is the cost? If it all depends, if it's regardless of the type of business model you do, then they have different costs. They have the requirement, what they need is different. So you cannot use one to judge the other one. But I will try as much as I can by Monday to give you the different common type of business model, the cost, so that if you want to embark on them, so that you know what it takes to start an e-commerce business. Okay. So we have Now we are here. We have what are the 10 ways to finance your e-commerce business? There are 10 ways to finance your e-commerce business. 10 ways, according to that blog. I saw it on that blog online. Number one way, which it will come to mind when we want to talk about doing your deals, is personal, from your personal saving. That is what we call that is what we also call the bootstrapping. You bootstrap your business. You are relying on the money that you from your personal saving to fund your business. That is from personal saving. Then we have the traditional term loan. Term loan are for example, if you have a job, maybe you have another job and you don't have a savings. But this job, your paycheck goes to this account every time. You have a bank account that your paycheck goes to every time. So you can actually go to the bank and request for personal loan. It's called a term loan. Maybe you borrow it against they know that you have a check coming in every time. Then you can go and borrow money against it to develop your e-commerce store. Because if you now want to wait until you save enough money, you might be delaying action. Most of this term loan, which is called which is you get from the bank, if you pay them off within a certain period of time, maybe like 90 days, you might not even need to pay any interest on them. So that's actually the way it works. So, and when you are paying, if you don't pay off within that time, when you are paying, it's actually the balance that you are paying interest on. So the more you can lower the balance, then the less the interest that you will pay on it. And even if you pay interest on it, at the end of the day, you can write them off from your taxes. I'm also a tax preparer, so I'm telling you from that side. So you can write off the expenses, all the expenses on your taxes is tax free. So that is that one. Then we have the other cards. Sorry, we have purchase order financing. Purchase order. So you can that is like buying on credit from your when you buy something on credit from your supplier. That is the purchase order financing, because they actually finance your business. I remember when I was growing up, my mother she's a trader, a petty trader. So some of the things that she says, she will collect it from the people. I mean, specifically my mother says bushmeat. I'm very proud of that. So she said bushmeat. The bushmeat now, she get them from the hunter that goes inside the bush. They go and hunt for this meat. So some of them, they will bring the food. They will bring those things. They will supply to my mom without collecting money. So that don't worry, by the end of the month, give me the money. So they're actually funding my mother business. So by the moment she sells them, she will not keep their money and give them their money. So that's an example of purchase order fund financing. So you get it from so let's say you are selling clothes. Then you can talk, maybe you talk with it might come at a higher rate, but that notwithstanding, you are not paying for it. They give it to you. When you sell it, you give it back to us. So we have SBA loan. SBA stands for Small Business Administration. That's like in the United States. They give out loan because they are the arm of the government. They are the agency of the government that support the growth of the economy. So that is the vehicle that the government used to dish out money to the public. So you can approach them that, hey, I need loan for my business, and they'll tell you the requirement and they'll give you the loan. So invoice financing. That means invoice financing. That means that you have already sold this item. You have written an invoice concerning sold, but the customer has not paid you. They have not paid you either a whole or a part. You have the invoice. It may be so many. You can carry that invoice to a bank or some organization that have some financial institution, agency, financial company that are funding invoice. They look at your book, how much invoice that you have pending. You say, okay, we have about 20,000. Okay, I'm going to give you 5,000 loan towards that so that you can pay your bills on time, so that your cash flow will not go to suffer. That's another form of financing. Inventory financing. That is based on numbers of goods that you have, the inventory, numbers of things that you have currently. Sorry. That's based on numbers of things that you have currently, numbers of goods that you have currently. Let's say you have bought, let's say you have bought a lot of materials. People have not bought them, but you have them many. And there's a track record that you're going to sell them. Maybe you are buying it. You can use as an evidence to the bank. If you use as a collateral to get some money to do what you need to do your e-commerce. So that's another way. An example is that maybe you are selling in a physical store before, and you know quite right that if you set up an online store, then you are going to, if you set up an online store, then your business, you are going to be selling. Now, you don't have money to pay to set up an online store. What do? You can go to the bank and apply for for loan, inventory financing, and they give it to you. So another one is I think I missed the business credit. We have number 3. I think I missed the business credit. I didn't remember when I described it. The business credit is you as a business, just like as an individual, you can be entitled to a credit facilities. So this credit might be in form of money or anything, but let's look at the form of money. They might give you have a credit of $5,000, meaning that the bank give you a credit card with some money in it that you can spend based on your limit. You can use your credit card to pay for some of those things, but those are some. So there are business credit cards, not even just personal credit card, that you can use. So that's actually that one. You can use that, and then they can also increase your credit limit. If you know that you have a lot of activity, they will call you. Hey, I see that you have a lot of activity. Why not take advantage of our revenue system so that we borrow you money? So what am I trying to say in essence that it is the so what am I trying to say in essence that based on your credit, you can have access to money that you can use to pay some immediate bills, including the one required to set up your e-commerce business. Then we have what we call the revolving line of credit. Line of credit is similar to credit. It's also a credit, it's a line of credit, but it's not really a credit card. You can apply for a line of credit, revolving line of credit. It's also a way to build your credit anyway. When you are paying it, you are going to you might get it for free. And at times, if you don't use it, they may not ask you to pay. You may not pay any money at all. You just have it, just like as a form of saving in case of emergency, that you need to buy some things or so. You could go to your bank and say, how can I apply for revolving line of credit? They will give you the form. Then you apply. When you apply, they tell you how much you are qualified for. Though such line of credit they are backed up by your personal credit anyway. If you are just starting out, it's different for your personal credit guarantees it. They use your personal credit as a basis, as a guarantor to that business line of revolving line of credit. So meaning that if you have a good credit, then your chance of being approved is very high. So most people they can start with $10,000, $20,000. Even some people have $50,000. Even some people can grow it for a business to up to about $500,000. I've had people that have a line of credit over $500,000. Though there are some conditions attached to it anyway. Then we have the venture capitalists and the angel investors. Those are the big ones. Their job is to give out money. That's why they are called angel investors. They appear like an angel. When you really need money so badly, they give you money. So when Google started their business, it was one angel investor that gave them $100,000 to start. So they act like an agent. They are so nice, you know. You find some people in your life. Oh, I want to do this. Okay, don't worry. How much you need? 20,000. They give you. They write the check for you. Those are the angel investors. So we have the crowdfunding. Crowdfunding is another way for actually running a business. It could be used for non-profit, for profit. How's of that one? Just like, you know, God forbid, you know, so when somebody want to raise money, like my brother or friend Shurel Moyele, he uses GoFundMe to raise money for financial political campaign. You go to GoFundMe, they create a page, put it there, share the link, people begin to donate money. So that is a crowdfunding. But there is a crowdfunding for business. There are websites you go and create a page there, and on that page you make your promise known. This is what I'm going to do. Then if you support me, you may not actually ask for, you may not necessarily need to ask for money, free money like that. You can promise services in return, but you make a strong appeal. Like, for example, let's say for example, we are setting up a business just to be selling services or products. You can promise that you're going to give them for them to pre-order their product, their own. So maybe you are manufacturing something now, you can make an appeal. Please, I'm starting this business. You make a video. You make a video, and that video is, okay, please, I'm starting this business. I want to change the face of Africa, and I need money. I need $20,000, but I don't have the money. But I want you to support me wherever amount. If you support me with $20, I'm going to send you one T-shirt. I'm going to send you one of my products for $20. Though the regular price will be like $30. But because you are supporting me, I'm going to send it to you at $20. Then you make that promise. Then you set it up. Then you share the link. Then people begin to click on the link and begin to donate. They begin to donate. That is crowdfunding for you. So that's actually the 10 ways that I have for now. So let me see what we got before we close for today. Okay, so the last and not the least, is the taxes. Is the taxes that we're going to talk about. What are different type of taxes applicable to e-commerce business in the United States? Because you cannot say you don't know. You are running a business, so you don't want to go against the law. You don't want the government to put a lien on your business, on your property. So you got to find out, depending on where you are watching this video and where you live, and the law, the law that are applicable to your business. You can check with your local attorney or an accountant. They will be able to tell you the applicable laws. I'm here in the United States. So the United States of America has a progressive tax system, which means that the higher income earners are taxed at the higher rate. So the federal government taxes the income of individuals and corporations. So as an individual, the income that you make, and also as a corporation, all these incomes are subject to tax. Not only do we have federal tax, we have state tax, then we have even a local tax. In some states, you have the city, we have the city tax, that's the local tax. There are 3 types of taxes, and I know it's the same for that e-commerce business in the US have to pay. So we have the income tax. That is on you as the owner of the business, and even your employee working for you, they have to pay income tax if they are based in the United States. They also have to pay sales tax. Sales tax are the tax like they call them, some people might call it value added tax, VAT or whatever. So it's still the same sales tax. Sales tax is the amount of money you pay on a product. Maybe you buy a Coke, so you buy something for $50. they're going to put tax, and that tax they put, you buy for like $50, maybe like buy for like $100. By the time they are giving you receipt, they are charging your card. You see, they are charging you $108. How come that $8 there? It is the sales tax. So you as the seller, you have to remit that $8 to the government, because the only part that belongs to you is the $100. The $8 on top of it, you are helping government to collect it, and you cannot lie about it. So you have to submit it to government. That is sales tax. Maybe you have a property that you rent, or you have a property that you use for your business, either house or warehouse. There's a property tax on it that you have to pay. That is called the property tax. Those are the three fundamental basic tax that you are paying. Tax is huge. I can tell you there can be over 100 types of taxes that is even being paid in the state of Texas, not to talk of the whole of America. So tax is very, very broad. So we just limit to income tax, sales tax, and property tax at this time. The main difference between these three is the level of taxations imposed on them by different levels of government, which is true. So property tax is levied by government. For example, property tax is levied by government, while sales tax is levied by state government. Income tax is levied by both federal and state government for individuals as well as corporations and land. So that's what I have for now for the entrepreneurial finance. So at this point, then I'm going to open it for question and answer, so that you can ask me your questions or your comments, then we discuss it, then we round it up. So like I said, by next week, by Monday, then we're going to complete the whole class. So we're going to talk about what does it take for you. What does it take you to grow your e-commerce business? Because your e-commerce business is not going to be stagnant, to be in the same spot, to be a startup forever. It's going to become a grown-up one day. And you as the owner, you have to prepare for growth of your corporation, of your e-business, e-commerce business. That is that. So that's how we're going to discuss next Monday. And also we're going to discuss about how we're going to work together. Then that's it. So questions, you can raise up your hand, then I'll call you. Any question? So if there are no questions, then we can just run it up so that we don't really waste our time. So thank you very much for coming today. Then I look forward to seeing you by Monday, same time. Thank you.
Thank you, sir.
Yeah, God bless you.
Bye. Thank you, sir.
You're welcome.
Thank you. Take care of yourself. Maybe you should say, daughter.